As my thumbnail suggests, I believe that we have entered the AI bubble. Well, just look at the stock I recommended to you about, I guess it was 8 months ago, Super Micro Computer. It's up 86%, maybe even 90% when you count today in 1 week. That's a bubble. Do you know what Super Micro does? They're the people who take the parts, the GPUs from NVIDIA and the switches and the relays and everything, and they put it in a box along with eight GPUs, and then they put a water cooling system into it, and it weighs 80 pounds with 3,000 parts, and they sell it to Amazon and Google and Microsoft for $250,000. Well, they buy hundreds of them, thousands of them to put into their data centers. Well, how long is that going to last? I mean, how many data centers do you fill? And then they're just the people who put it together. They're not making any unique creation. So it's a bubble. And once the data centers are filled, well, then that bubble collapses. No, the real money in AI is going to come from when it changes you and I's life. When we sign up for a $19.99 per month. I mean, Netflix wasn't worth anything until you signed up for it, because it's a consumer society. And we need to recognize that, and that's what I want to do in this video, is show you this is not the first time this happened. I mean, that's right, there was a railroad crisis. It was back in the 1800s. And then there was a radio crisis around RCA radios. I mean, everybody got excited about radios and wow, let's run up RCA's price, but nobody had a radio. And then the infrastructure was built, and then once it was built and we had the radio waves, what was the name of the company that built the radio waves that brought radio into our world? You don't know, because they disappeared. That's what's happening. It's a perfect example of what's happening with AI. We're building the infrastructure. Once the infrastructure is built, if I paid $330,000 for a computer and NVIDIA came out with a new chip, am I going to buy a new computer, or am I going to replace the chip in the computer I've got? This is a bubble. It's going to change our world, and it will be a positive change. But what you're dealing with right now is over-enthusiasm. Do you remember NEO? Do you remember Xpeng? Do you remember Tesla? It's a bubble. So get away from it for a while, and then as the dust settles and the expenditures are made, because, again, who is Supermicro's biggest customer? They said their biggest customer represents 25% of their business. Listen to their earnings call. Who is that? It's either Google, it's either Amazon, it could be Microsoft. I doubt if it's Apple. It's one of those three companies. And then they said their second largest company represents 17% of their business. That's the other two. Okay, so with that in mind, I want you to be knowledgeable how bubbles work and how they change the investment picture and how you can profit off of it, ride the bubble up. It's time to sell Supermicro. And then as the bubble collapses, then you buy back in to those who are going to charge you $19.99 a month. When you see that is going to happen. That's how it works. This is all a matter of turning around and looking in the past and seeing what's happening, even to the point of recognizing we're in the midst of a inverted yield curve. When was the last time that happened? Just before the housing crisis. When did it happen? Just before that? Just before the dot-com bubble. It's all happening again. Now what you need to know is, where do you put your money while you're waiting for the bubble to deflate so that you can get back into Google, Apple, Microsoft, NVIDIA, and any other companies who are going to be permanently a part of this program? Who's going to deliver it to your door and collect $19.99 a month? That's who you want to invest in. But let's first of all understand history tells us what's going to happen. Now, you might say, you're bouncing all over the place. Yeah, if I'm going to get run over by a train, the bursting of the bubble, I'm getting out of the way. And I'm going to put my money that will move conversely with the bursting of the bubble. And I figured that out. But we'll talk about that another day. Or why don't you just come to bestofusinvestors.com and look on my website. And what I'm going to do now is I went to my website and I asked my ChatGPT, give me a history on bubbles and what I need to look out for and how I can best invest in them. And that's what you're going to see right after this message.
Best of Us Investors presents Kerry Griegmeyer.
Throughout history, there have been several instances where stock market enthusiasm led to the formation of bubbles that eventually burst before the full and widespread adoption of the underlying innovations. Here are a few notable examples. In the mid-19th century, there was a speculative frenzy known as railway mania in the United Kingdom. Investors were overly optimistic about the potential of railway companies and rushed to invest in their stocks. However, many of these companies were overvalued, and the bubble burst in the late 1840s, leading to significant financial losses. The development and widespread adoption of radio technology in the 1920s led to a speculative bubble around companies involved in the radio industry, particularly RCA. Stock prices soared as investors anticipated the broad use of radio technology. The bubble burst in the stock market crash of 1929. The Nifty 50 were a group of 50 high-flying stocks on the New York Stock Exchange, including companies like Xerox, IBM, and Polaroid. In the early 1970s, these stocks were considered one-decision stocks, and investors were enthusiastic about their long-term growth prospects. However, the bubble burst in the early 1970s as economic conditions changed, leading to a significant market correction. In the late 20th century, there was a bubble in the biotechnology sector as investors became overly optimistic about the potential of emerging biotech companies. The bubble burst in the early 2000s as many of these companies faced challenges in bringing products to market and generating profits. While not directly related to a technological innovation, the housing bubble of the mid-2000s is a notable example of speculative excess. Excessive lending, securitization of subprime mortgages, and a belief in ever-rising home prices led to a housing market bubble. When the bubble burst in 2007 to 2008, it triggered a global financial crisis. The term EV bubble has been used to describe the rapid rise in stock prices of electric vehicle manufacturers and related companies, particularly around 2020. This surge was attributed to increased investor interest in the potential growth of the electric vehicle market. Whether this phenomenon is characterized as a bubble may depend on factors such as the sustainability of the growth, market dynamics, and the long-term prospects of the companies involved. Similar to the EV bubble, the term AI bubble has been used to describe the current market enthusiasm centered on investment in companies focused on artificial intelligence technologies. The AI sector has seen substantial attention and funding, with expectations of transformative impacts across various industries. Whether this represents a speculative bubble may depend on factors such as the actual adoption of AI technologies, the business models of AI companies, and the realization of expected benefits. These historical examples underscore the risks associated with speculative bubbles and the importance of distinguishing between short-term market enthusiasm and the long-term viability of innovations. In each case, the burst of the bubble preceded or accompanied a reassessment of the fundamental value of the assets involved. That brings us to the current state of AI, and it parallels some aspects of the dot-com era. Many AI advancements have been driven by substantial investments from tech companies and venture capital. Similar to the dot-com era, there has been a significant focus on technology development and innovation, often without immediate or clear paths to consumer monetization. Some AI applications, particularly in the realm of machine learning and artificial intelligence research, have faced challenges in translating technological advancements into direct consumer monetization. In certain cases, the primary focus has been on building and refining the underlying technology rather than delivering consumer-facing products. While some AI technologies have yet to find direct consumer applications, there is potential for these innovations to shape various industries, eventually impacting consumers indirectly. For example, advancements in healthcare AI, autonomous vehicles, and smart cities may eventually have consumer-oriented impacts, but the realization of these impacts could take time. Many AI companies have initially focused on providing solutions to other businesses, B2B, rather than directly serving consumers. This B2B approach can delay the visibility of AI in everyday consumer experiences. It's worth noting that the landscape is dynamic, and the commercialization of AI technologies is ongoing. Companies are continually exploring ways to bring AI applications into consumer markets. For instance, voice assistants, recommendation systems, and personalized user experiences are examples where AI technologies have started to have a more direct impact on consumers. The timeline for innovations to become profitable enterprises and part of everyday life can vary widely depending on the nature of the innovation, the industry, regulatory considerations, and market dynamics. There is no fixed rule, but historical examples and trends can offer some insights. The time it takes for innovations to become profitable and integrated into daily life can range from a few years to several decades. For instance, the commercialization of the internet took several years, with widespread adoption occurring in the 1990s. On the other hand, the adoption of smartphones and mobile technology happened more rapidly, with smartphones becoming ubiquitous within a decade of their introduction. AI is a broad and evolving field, encompassing various technologies and applications. The timeline for AI becoming a part of everyday life will depend on the specific applications and industries. Some AI technologies, such as natural language processing and image recognition, are already integrated into various products and services. Other applications, like advanced robotics or fully autonomous vehicles, may take longer to become commonplace. While AI may become public knowledge at a particular point in time, its integration into everyday life often follows a more gradual path. Public awareness and understanding of AI may precede widespread adoption as businesses and industries work on refining and implementing AI solutions.
Understand that the last 6 minutes of this video was generated entirely by artificial intelligence. That is, I have on my website a chatbot that I go to and I ask a series of questions, and it gives me a dialogue. I then take that dialogue and I massage it and I put it into a format, and then I take it to a website that I pay $100 a month for, and I upload it into my avatar's mouth and I project it, and it comes to that. So I'm spending about $200 a month plus what I pay for, no, that's about it, $200 a month for artificial intelligence. So I ask you the question, how much do you spend? How much do you spend on artificial intelligence? And until you answer the question to me, $19.99 or $49.99, until you answer the question that way, this is a bubble. This has got to, it's not been monetized yet. How much do you pay for streaming? How much do you pay to Netflix? How much do you pay to HBO? That's a monetized business. It's the same thing that happened to Larry and Sergey. They built this thing called Google, and they were throwing all this search out, and someone came to them and said, how are you going to monetize it? We don't have a clue. They went and hired a businessman who figured out they'll sell advertising. The same thing happened to Mark Zuckerberg. But the reality is, as the enthusiasm exists, a bubble is blown up. Elon had one. He's got one on his hands right now. He hopes he can reinflate the bubble. But you invested, a lot of people invested, and made up a load of money. And then the bubble deflated. Recognize that's what's happening right now with AI. The money that's being exchanged is being exchanged amongst and between the big tech companies. You and I are not playing in the game. And until we play in the game, until it is monetized, it's not a viable business. It's just a big data center with god-awful priced computers in it that's hoping they can get $19.95 out of you and I a month. And they will. They will. Rather than searching for information, much as how I'm using it to solve problems for me, make videos for me. Think about that. Eventually, Kerry's going to die, okay? But because of artificial intelligence, Kerry will live on and continue to make videos for I don't know how long. That's the world we're stepping into. Recognize it for what it is. Recognize we're going into a pullback. All the pieces of the puzzle are there for the pullback. Get out of the way of the train, stand on the other side of the track, and benefit from the bubble burst. When NVIDIA comes back to $450 a share, we'll buy back in. Got a deal? Okay. If you want more like this, subscribe, leave your comments, and then if you want the inside story as to where we are going to invest while this bubble deflates, come to Best of Us Investors, and why don't you get on the bus?